Good day, everybody. This is Jim Sloman speaking. This is a standard chart of what exponential growth looks like. And you'll notice that it moves very slowly here, gradually gathers speed, and then gathers speed faster and faster and faster as you move up like this. Today, I would like to comment on why I believe that inflation in the United States will not moderate, will not cease, will not decline, and in fact will accelerate until it is galloping faster and faster. Of course, it is already galloping. The official rate of inflation came out just this week, 1.6% over the last 12 months. Goodness, that's low enough to put one to sleep. But as we discussed on a previous occasion, the real rate of inflation in the United States is much, much higher than that. Because that CPI statistic has been progressively manipulated by successive administrations over the last 30 years until it is almost unrecognizable, much lower than the true reality. In fact, the real rate of inflation in the United States right now, as measured by shadowstats.com, as it used to be calculated in 1980 before the manipulations began, is now 9.07%, rounded off 9%, and increasing. Just go to the grocery store or the gasoline station or the department store and you'll see what I mean. And as we discussed on a previous occasion, generalized inflation is almost always blamed on everything but its real cause, which is an acceleration in the supply of money. Now let's look at gross federal debt. And you'll notice a similarity between the growth of federal debt and the last chart that we saw. Notice that it's rising slowly here, rising faster and faster, and now it is moving up in an exponential fashion. Notice the similarity between these two charts. I'll show you the previous one again. Here's that one. Now look once again at the growth in federal debt. You'll see the similarity between those two. Ultimately, inflation comes about because of debt. What happens is that a government builds up expenditures that so far exceed its revenues that it simply can't pay them except by issuing more and more debt. And beyond a certain point, the debt itself is unsustainable. Beyond a certain point, the debt simply can't be dealt with except by the issuance of new money to pay for the debt. This is what happened to Germany in the early 1920s. Between the debts it had built up in fighting World War I and steep reparations to the Allies who had won the war, Germany simply couldn't pay its bills, and so it resorted to the printing press to pay them, which seemed to solve the problem for a while until the piper had to be paid. The end game was astronomical inflation that at first rose every month, then every week, then every day, then at one point every single hour. The complete destruction of the currency and the middle class ultimately led to Hitler, but that's another story. Now I want to show you the monetary base. This is courtesy of the Federal Reserve Bank of St. Louis, and notice that the monetary base, which was growing slowly, has now taken off at an almost vertical level. It's a little-known fact that the central bank in Germany saw the damage it was doing at one point and tried to stop the money printing. But one of the fascinating things about inflation is that eventually the inflation rate rises faster than the government can create money. And so paradoxically, there is a hue and cry about the shortage of money, even as more and more money is being created. So when this German central bank tried to stop its money printing, the public and the government screamed for it to continue, and so it did, with ultimately catastrophic consequences. The same thing will happen in the United States. Currently, the official deficit in the United States is $1.3 trillion. That number is hard to fathom. $1.3 trillion. That's 40% of the federal budget. Revenue is only paying for 60 cents of every dollar that Uncle Sam spends. The real federal deficit is actually higher than that. If we want to know the real annual deficit, we look at the dollar value of the new debt that the government issued last year, which happens to be $2 trillion. $2 trillion. And that's not counting the unfunded liabilities, which are piling up at the rate of another $3 to $4 trillion a year. But hey, what's a trillion or two among friends? Now let me show you the top holders of U.S. debt. And you'll notice that the U.S. Federal Reserve has now emerged as the top holder of U.S. debt. It didn't used to be that way. Japan used to be the top holder of U.S. debt, then it was China. Now the Federal Reserve is the very top holder of U.S. debt. And here's the point. There is no political will in the United States to cut the deficit in any meaningful way. The Democrats are well known as big spenders, but the Republicans are no different. Look at what they did during the Bush administration. And recently, after adding $700 billion to the deficit by extending tax cuts for the rich, they're now making a big show of cutting the deficit by $60 billion. The last I looked, $60 billion represents just 3% of a $2 trillion deficit. Meanwhile, Medicare, Medicaid, Social Security, and the defense budget, which together represent 88% of the federal budget, have all been declared off limits. And the administration's new budget is pure fantasy, supposedly cutting the deficit by assuming a 65% growth in GDP over the next 4 years. That's like believing in the Easter Bunny. The so-called deficit-cutting efforts by the administration or Congress, by either party, are just political theater. They are not going to make any real difference whatsoever. The debt will go on accelerating, and it will be monetized. The Federal Reserve, the U.S. central bank, is now in effect funding 100% of the deficit through quantitative easing 2, which is a fancy name for vast money printing. Now I want to show you M1. And this again is courtesy of the St. Louis Fed. Notice the similarity to not only our original exponential chart, but the U.S. government debt chart shown to you previously. Supposedly, the quantitative easing will stop this June, and it may stop for a little while. But what will happen when the money printing stops? I want you to notice, again, a gradual rise, and then if you were to draw a moving average through here, it would go through here like this, and now an almost vertical rise. What will happen when the money printing stops, if it does? The U.S. economy will start rapidly heading down into the biggest depression you ever saw, because it's only the money printing that's holding it up. And when that happens, guess what? The public and the government will put pressure on the Fed to continue the money printing, just like what happened in Germany. And the pressure to do so will be so intense that the Fed will continue its money creation. Just watch. After QE2, there will be QE3, and then QE4, and so on. And the U.S. will enter the final endgame of destruction of the dollar. As the dollar self-destructs, do we understand what that will mean? That will mean the most staggeringly rising prices at the supermarket and the gasoline station and every place you go to buy things that you need. The U.S. has now gotten onto a track that it can't get off without tremendous pain, just as a heroin addict can't get off heroin without going through the hell of withdrawal. And it's not just the U.S. Money printing has been and is going on all over the world, and the eventual consequences are predictable. As the Austrian economist Ludwig von Mises said, quote, "There is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as the result of a voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved. Here in the U.S., we've opted for later, but later is now not that far off and will be arriving, in my opinion, sometime within the next 2 or 3 years. That's all for today. May every possible good fortune be yours. Bye-bye now.